Hey, good morning, everybody. Today is Friday, July 24th, 2015. My name is Cliff Backus, and this is your daily video market review. Stocks started higher but closed modestly lower again yesterday. Trading volume was mixed, with volume on the NASDAQ coming in slightly below Wednesday's levels, while New York Stock Exchange volume was higher. The S&P 500 struggled to hold support at its 50-day moving average as it recorded another distribution day. This is its third distribution day in as many trading sessions. A distribution day is a day when a major index sells off more than 0.2% on heavier trading volume than the prior trading session. Distribution is a sign of institutional selling, and too many distribution days in a month can be a sign that the market rally is in trouble. The mid-cap S&P 400, the small-cap S&P 600, and the IBD 8585 also recorded distribution yesterday. In keeping with the somewhat uncharacteristic behavior of the market recently, the IBD 50 recorded an accumulation day. Declining issues bettered advancers by better than 2-to-1 yesterday. The New York Stock Exchange advanced decline line continues to look more bearish than bullish. New lows continued to better new highs by about 5-2. Our market timing model is showing a buy signal on both the NASDAQ Composite and the S&P 500. A buy signal indicates that traders can continue to accumulate long positions here, but shouldn't be increasing margin. The O'Neill market model is showing a confirmed uptrend in the market. Our distribution count is reasonable on the NASDAQ, but extremely high on the S&P 500. Large capitalization stocks handily outperformed small yesterday and are now easily outperforming on a 10-day moving average basis. This is a condition much more consistent with a market in correction than with a confirmed uptrend. Our swing timing model is indicating a neutral condition in the market. Although we're bullish at this juncture, we continue getting mixed signals in the market. We continue to advise caution. Bulls should be free to put cash to work here, but be sure to keep your stops in place and err on the side of caution. What we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage change. The reason we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power in the market is and get out in front of it. So let's see where the strength in the market has been for the past week. This past week we saw the airline index up 3.2%. Building subcontractors up 3%. Toys and games up 2.8%. Insurance brokers up 1.9%. And internet-based services index up 1.8%. We've seen a lot of strength in the airline index recently, and we've also seen a lot of strength from builders. Let's take a look at the Russell 2000. Russell 2000 yesterday was down again, down 13.38 points or 1.06%. It closed at the very bottom of its daily trading range and undercut the prior day's low, which continues this little mini downtrend that we've been seeing. We closed at 1244, and right now we're bracketed by support down here in the 1226 area and resistance up here at this prior trend line. It's a note of concern that the Russell violated this trend line, came down, and then retested the trend line on the bottom side and failed. We want to see the Russell 2000 hold support down here in the 1226 area and then hopefully come back and recapture this trend line. Let's see what the NASDAQ Composite's up to. NASDAQ yesterday was down 25.36 points, or almost 0.5%. It closed at 51.46 and undercut support down here in the 51.64 area. Trading volume on the NASDAQ yesterday was below the prior day. And for you followers of William O'Neill, we are on a confirmed uptrend in the market. We've been on a confirmed uptrend since May 14th. We have only 4 distribution days on the NASDAQ, which is fairly reasonable for this stage of a confirmed uptrend. Right now, the NASDAQ is bracketed by support down here in the 48.88 area and resistance up here in the 51.64 area. We are on a buy signal on the NASDAQ, which indicates that traders can be adding long positions to their portfolios, but should not be increasing leverage at this point. Let's take a look at the S&P 500. Yesterday, the S&P was down 12 points, or 0.57%. S&P closed at 2102. It seems to have held support at its 50-day moving average yesterday. Trading volume was higher than the prior day, giving us yet another distribution day. Right now, the S&P is in a confirmed uptrend, but we have a lot of distribution. We have 7 distribution days in the past month. Right now, the S&P is bracketed by support down here in the 2072 area and resistance up here in the 2134 range. We want to see if the S&P continues to hold its 50-day moving average right here. We're on a buy signal on the S&P 500, and there are a few stocks I want to take a look at today. First, Adeptus Health owns and operates 55 freestanding emergency medical facilities located in Texas and Colorado. The stock yesterday reported earnings, and we had a really nice pocket pivot that carried the stock up through its 21-day exponential moving average, its 10-day simple moving average. Recently, Adeptus broke out of a second stage base down here in the 3878 area and has gone on to almost triple that. Adeptus gets a 72% checklist rating and can be bought by aggressive investors here on this really nice pocket pivot gap. Next, let's take a look at CyberArk Software. CyberArk is an Israeli provider of network security software focused on protecting privileged accounts for commercial enterprise. Recently, CyberArk broke out of this second stage cup and handle base. The stock failed that breakout, but right now is working on a third stage base. CyberArk gets a 72% checklist rating, and yesterday we had a real nice pocket pivot in CyberArk. We traded higher trading volume than any down day in the past 10 trading sessions, which is the definition of a pocket pivot. We gapped up through the 10-day simple moving average and the 21-day exponential moving average. It should be noted that CyberArk did balk at its 50-day moving average, and aggressive traders can buy the stock here, but may want to wait for it to better that 50-day moving average before they jump on board. Finally, Valeant Pharmaceuticals develops branded drugs in the areas of dermatology, neurology, eye health, and over-the-counter products. The stock yesterday reported earnings. It broke out of this fourth stage base, very late stage base, on very heavy volume, a nice gap above the base there, and the stock can be bought here, keeping in mind that this is a very late stage base. I like Valeant because it gets an 80% checklist rating, even though it is still in a fourth stage base. Stock has recently held support down here at its 50-day moving average, and yesterday broke above the pivot point at 246.01. Valeant can be bought by aggressive traders here. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.